Dr. Jisha, Associate Professor, Department of Professional Management Studies, Krista Jaiti College. Today we are going to discuss a concept called as income tax. So when the students study an income tax, what will be the outcome they learn from this subject? So here a student will be in a position to compute their own income tax. They will come to know what are the provisions available as per income tax, how to file a return, and what are the investment they can plan to reduce their tax. So this will be an overview taught during this course, income tax. So moving with first income tax, let's start with the history of income tax. So, early days, even during the period of king, there was a tax system where the laborers or the people who are working, they contribute one minimal portion to the king, which will be used for the nation or to their places. So likewise, this income tax, which effectively started from 1857, during the First World War, there was lot of expenditure incurred for to meet the military expenditure. So here, Sir James William introduced this concept called income tax to collect a portion of money from the public and which is being purely used for the military expenditure to meet the development of the nation. So there was numerous amendments were passed from 1886, and there was an introduction of new income tax. There was a restructure of new income tax in 1922, and a special commission, a law of commission, it comes under a law of commission, income tax was being passed. Later stage in 1961, an income tax act was passed and it started implemented in the year 1962. That is from 1st April 1962 till on. We are still following the same system which has been passed in the year 1961. So apart from that, you need to know what is the meaning of tax. So tax means it is a contribution made by the public for the income what they earn. So it is the tax is being collected by the government. It is to meet the general expense which is being incurred in the nation. So it is a compulsory contribution by every individual who is earning an income. So it is mandatory. Every citizen of India should pay a tax for the income what they earn. So there are various features of income tax. So it is compulsory payment which is paid by citizens who are liable to pay tax. And this is levied to meet the public expenditure. So, government is implementing various schemes. They are providing opportunities for the unemployed. They are creating a development in the country in various sectors. This is all happening from the fund which is being collected from the public in the form of tax and which is being used for the development of the nation. And the tax is not direct connection between a person who pay tax. So here it means it is not compulsory. The person will receive direct benefit for the tax what is being paid. So it is only on the common interest where an individual will get benefited. Say, for example, development of transportation, development of hospitality. So it is an income paid by every individual, and that money which is being pulled up by the government is being used for the development of nation. So the payment of tax by person does not entitle him to receive any direct benefit from the government. So there is no direct benefit for every individual for getting from the government. I mean, getting benefit from the government for the tax what we have paid. So here the tax system is classified as direct and indirect, which is nothing but GST. So what is direct is a tax will be levied directly on the person, and the person is liable for making payment for the income what they have earned. Whereas indirect tax, it is not like that. It is not levied directly on people. It is being diversified to the different people. Say, for example, you are going to a restaurant. Okay, so you have food, and when you get a bill, you can see in that bill GST is being added. So it means what? It is paid by the restaurant owner, but it is being collected from the people who are going to that restaurant and using that food. So it is imposed on different people. So the burden is being shifted to different people in case of indirect tax, and the burden is not shifted to anybody if in case of direct tax. It means what you earn, you need to pay for that as a form of tax. What are the features of income tax? So it is first important feature is central act. It is covered under the Central Board of Direct Tax, and it is a direct tax. It is levied on individual, directly on the individual for the income what is earned. And the tax is levied only on the income. If a person does not fall under the slab rate or does not come under the income criteria, that person is not liable to pay tax. So whoever earning an income is liable to pay tax for the income what they earn, and it is an annual tax. So every year the tax is computed from April to 31st March, and that is being paid before 31st July. Okay, and it is levied on person. It can be an individual, it can be an company, it can be an university, anybody. So it is levied on a person, and it is liable for every individual to pay tax on the income what they earned. And the rate of tax is differ from person to person. It is not a static uh, rate. It depends on what income you pay. Based on that, you need to pay tax on the different rates. And here we are going to learn few terminologies what we use in income tax. The first one is assessee. As per section 2 subsection 7, assessee means it's nothing but a person who is liable to pay tax to the government. Say for example, I am earning an income, then I am called as an assessee. So I have to pay tax to the government. So that person is considered as an assessee. The next concept is deemed assessee. Deemed assessee means a person is being forced to be an assessee. Say, for example, you have a minor child, and you are a guardian of a minor child where the child is having lot of property or income is being generated in the name of minor child. So here a person who is acting as a guardian will be liable to pay tax. So that person is called as deemed assessee. The next is assessee in default. So assessee in default means a person is responsible for doing any work under income tax and fail to do. He is called as assessee in default. Say for example, a company is treated as assessee in default. Say for example, I am an employee, so it is a duty of a company to deduct a portion of money as a TDS. So in case of fail, it is called as assessee in default. Next is a person. So as per section 231, there is no proper definition as per income tax. It is includes. So it includes an individual and firm or an association, artificial judicial person, Hindu undivided family. It can be a company, yes, and local authority. Like that, it is being defined. Everyone come under the head called as a person. So individual means X or Y. A firm, it can be a X and Y partnership firm, or it can be an university, any universities. Yeah, it can be any company, limited company or private limited, etc. So there is a small difference between an assessee and a person. So a person, every assessee is a person. It means a person who is liable to pay tax is called as a person as well as assessee, but it is not mandatory. Every person should be an assessee. Say for example, assessee means a person who is liable to pay tax, whereas person means it can be anybody, even who is not come under liable, who does not come under payment of tax, also considered as a person. Next is assessment year. So assessment year means it is nothing but a year which starts from April and ends on 31st March. So we are having a current assessment as April 23 to 31st March 24. And the next is previous year. A previous year means it is nothing but your financial year Or another way you can call a preceding of your assessment year. It means your assessment year was, it is 23 to 24 means that is April to March. Your previous year will be 22 to 23 from April to March, which is nothing but your financial year. The next is income. So income means as per income tax, there are various forms you can consider as an income. It can be a salary, it can be a perquisites, it can be profit in lieu of salary, it can be a dividend, it can be a voluntary contribution, it can be a casual income, it can be an income from capital gain, or anything it can be considered as an income as per income tax. Next is important head is 5 heads of income. So an individual can come under 5 heads of income, or even possibility is there to come under any one of the head of income. So the first head of income is income from salary. The next is income from house property. Third one income from business, and fourth one is income from capital gain, and the last one is income from other source. So let's take one example. Suppose X, let me take an example of myself. I'm a person earning every month salary. So I come under the head called as income from salary. Suppose if I have a house and that is being let out as a for rent, then I come under the category of salary, as well as I will come under the head called as income from house property. And I am a person as a teacher, and I'm also a doctor. So in that case, I come under the head called as income from profession. And suppose I'm selling a property, land or building or anything, then I come under the head called as income from capital gain. Apart from that, if I earn other sources of income like winning a lottery or getting some additional income, so these scenario I come under the head called as income from other sources. These are the 5 major heads of income under income tax. Next comes gross total income. So when you calculate all the 5 head of income, the total what you get is called as gross total income. And the next is total income. It is nothing but from your total income, if you minus the deductions of 80C to 80U, so that will be discussed in the further classes. So after getting those deduction, the balance what you get is called as a taxable income, which is total income. Hope this video was helpful for you. Thank you.